Good morning. You're listening to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance. And now, sharing his knowledge, here's your host, Matt Libby.
All right, good morning. Welcome back to Insurance Matchmaking. Rainy day as I'm recording here today. We've been needing the rain. Didn't have severe storms. I don't know if there was any last night. I always sleep through that stuff anyway. Glad to see the rain. I did plant some tomato and pepper plants the other day, so I don't have to water those for a couple days now. So enjoying the fact we're getting a little rain. I normally, when I get done here, I'll run through the car wash. I don't think I'll be doing that today. It'd be kind of pointless. But just kind of wanted to go over some things that have happened recently in just kind of some unusual situations. Not totally unusual, not out of my normal realm, but it just seemed like we have a lot of people coming in that had lost health insurance or recently moved and didn't have insurance. And sometimes we can help through the marketplace. And then we've got those that, because of their income, they're not qualifying for a subsidy. So we have a lot of different options there. One of the most unusual one that I dealt with this week, and had never done it this way before. We have had a couple times, we've had some instances where we've been able to get someone a special enrollment because their income situation changed. But it was a matter of, fortunately, we were able to get them off the plan that they shouldn't have been enrolled in to begin with, that, the wrong network. You've heard me talk about how Blue Cross has the S network and the E network, and it's very hard to find a provider that accepts the Blue Cross E network. Pretty much everybody takes the S network, which is the standard network. The E network is good at the hospital here, but if you want to go to the doctor, especially the ladies, they have their special doctors. In a lot of those, it's tough to make sure that the plan is in network with them. So we've run into that. So we were able to help one person that had signed up for the e-network, didn't realize what they were doing when they did that, because, hey, everybody's premium went up this year because of the not extending the expanded tax credits, and we went back to the regular tax credits. And I always try to stress that because a lot of people, they took the tax credits away. No, they took the expanded tax credits that were always meant to be temporary. Well, I don't know if they were meant to be temporary, but that's how they were presented. We'll put it that way. But so anyway, we were able to get this young lady off of the E network and back on the S network, so that her doctors will now be in network. Yes, she's paying a little bit more than she was for the plan, but at least she's got the coverage. And there was a slight change in her income, so that was able to get the special enrollment. The one that really threw me this week was I got a call from Knoxville, a referral from one of my clients in Knoxville from when I lived in that area, and they had been in that situation where, and I think it's partly in, how their application was done by whoever enrolled them, and there was something, the spouse who's on Medicare didn't give her Social Security number, and I think that's what threw a mess in there. Because one of the things that the marketplace will do when you're doing your application, because let me back up a little bit. The situation was, in November, the gentleman decided he was going to retire. And so he retired from his job, just kind of basically, I'm done. Like I said, the wife was already on Medicare. And so they filled out, they estimated their income for this year based on, okay, he's going to, he had like a pension or 401k they were going to draw out of and start his Social Security. But, he's 63, I think, right now. And so not eligible for Medicare yet. So he needed to go to the marketplace and estimated his income as being lower than it was when he was working full time, and it'd just be their Social Security. But for whatever reason, she said she never, and I didn't notice it when I was redoing their application, that her Social Security number was not entered in there. So it may have been, and she just thought it wasn't. But they got that notice. They got the notice, but I guess whoever the agent was that enrolled them didn't do a good job explaining to them that you are approved for this tax credit based on this income estimate, but you have to notify the marketplace that how you came up with those numbers to show. And that's why I'm thinking maybe her Social Security number wasn't in there, because generally when you put in your Social Security number, the software, the AI probably, is looking at your tax records and looking to see if you have filed your taxes, steadily over the past several years. And if you have, it usually will pop up with a question and says your income that you reported is much, different. And so it's funny, it's much different than what you have filed in the past. And I say different because for whatever reason, the algorithm will ask you to prove your income when you say you're making more. I don't understand that one, because if you're making, your income was high enough based on your tax returns to qualify for a tax credit, but you say your income is higher, you're going to get less tax credit. I'm not sure why you have to prove your income to prove that, you're not eligible for as much tax credit as your income would allow. But I do understand it when it's, saying, hey, you said you made $80,000 last year, and now you say you make $30,000. How is that? But there's a box you can check, and you just say, hey, lost a job, lost a family member, reduced hours, retired, and it's all lumped in there of, that any one of those can apply. And so usually that's usually good enough, because they're like, okay, you file your taxes. If you misestimated, we'll catch up on at tax time. At least I believe that's what the attitude is on it. But I'm thinking because maybe her Social Security number wasn't on there, there wasn't enough data available to show that this couple was very diligent in filing their taxes. So they had that requirement to prove their income. Well, I guess they didn't catch that part when they first got their plan, but you get 90 days. So what happened was in April, or maybe in March it was, that 90 days ran out. And so now the marketplace says, oh, you're no longer eligible for your tax credit. So where they were paying like $150 a month, now it was going to be $1,500. And they called the marketplace and asked what was going on there. And they're like, well, there's no way we're going to be able to afford that. And so just cancel it. So on the 4th of May, canceled the policy. And then found out what was going on, talked to somebody else, and they said, well, if you just send us a copy of your 2025 tax return, because taxes have been done now, you can get reinstated, but you won't have insurance again until June 1st, because if you've listened to my show of any amount of time here, you know that marketplace plans always start on the first of the month, and that's going to be subject for another case coming up here, but I want to finish this one. So, and I'm like, really? That's what they told? I'd never heard that before. I'd never heard, it's like basically when I've had someone who canceled their insurance, or it lapsed because they didn't make that big monthly payment, that I went ahead and found them an alternative plan, or they just said, well, I guess I'll go uninsured until open enrollment. We were actually able to do the application and be effective for June 1st and get a tax credit. Of course, as we put in the income and such, based on what it is, how much they're drawn out of the 401k and how much of the Social Security and retirement, it's actually was a higher income than what they had estimated back in November. So the tax credit was not quite as generous as they'd been having. So we ended up going down a little bit level on the plan, but also was able to backfill with, you've heard me talk about the TrioMed plan to help cover that high max out of pocket for a bronze plan. So if something happens, critical illness like a heart attack or a severe accident that would land him in the hospital, he would have the $10,000 to cover that max out of pocket for whopping $52.69 a month. And that's basically what it is for all adults. So it's a pretty simple plan there. It's like I can remember that number because everybody's paying that number, because the base of the plan is an accident plan. So the accident plans always just seem to have that built in, that this is the rate. You're over 18, this is your rate. So it's a great plan, especially for those, that are, in their 50s or 60s, where they may be another plan they based on their age, they pay a little higher rate. So that goes well. So the other side on that, I talked about everything starting on the 1st. Well, we had a young lady, just the end of this last month, and she had been on TennCare. She got the letter in April saying, hey, your TennCare is going to end on May 5th. Well, when we get done, or if you've done a marketplace plan, you know that it'll ask you a question. If you're filing because you lost coverage, it will ask you to put in the date that you lost it or the date that you're losing it. It's two different questions, but it'll and so generally, whatever it is, the insurance will be able to go in effect the 1st of the next month, or the 1st of the following month. So in her case, Elijah was one who helped her, and I said, go ahead and put on that part of the application that she's losing her coverage on April 30th. And then, like I said, because she had the letter from TennCare that was dated like on the 16th. I said, submit it that way, and worst case scenario, they're going to say, oh no, you're actually losing it on the 5th. We'll start your policy on the 1st of June. It starts on the 6th, 6/1. And actually, she came in the office yesterday and was having trouble setting up that first payment on it because now it's in May and she wants to make sure her insurance is active. And it went fine. And she had a copy of that letter, so Elijah was able to upload that for the required document the same day that did the application. So I'm not sure what day it went through that they go, oh, yep, you've completed that requirement. You qualify for your special enrollment. But she was able to get it for the 1st. And I bring that up because I don't know why TennCare does it like that. I guess it's based on whenever was the date that it was actually awarded. It's that date is kind of like your renewal date. And so when they determine that you're no longer eligible, it's on that date because that wasn't her birthday. So I don't know why they do that. It should be, and she sent it out they sent the letter out in April, so why didn't they just say, effective May 1st, not May 5th? And the same thing happens with those 25-year-olds who turn 26 and now they're too old to be on their parents' insurance. The same thing happens. If you put down that you're losing it on that date, or you don't wait until your birthday to come in, it's going to be the 1st of the following month when you if you go to the marketplace insurance. And you're not going to have insurance from your birthday to the end of the month. So when I get those, I've always put them in as they're losing it the last day of the month before their birthday. I kind of go, I guess that's my Medicare thinking process of Medicare always starts on the first day of your birthday month. And I haven't run into problems doing that. So I think the marketplace gets that part. I mean, you have a special enrollment for 2 months after your birthday. So if you did miss it, you're still going to get insurance. And most of the young people go, I'm not going to the doctor. I'm not sick. It's great. But you get hurt or you do get sick. It's a big deal if you don't have that insurance. So we're up on the commercial break. I'll get right back to you after that.
Why go to two companies when one will do? Bundle your home internet and your wireless service with one local company that does both. Twin Lakes Fiber Internet plans start at just $34.99 a month. And when you add Tri-Lite Mobile, your first wireless line is free. That's blazing fast internet speed at home, nationwide mobile coverage on the go, and one local team taking care of it all. Visit twinlakes.net or call 800-644-8582 to learn more today.
Join Habitat Restore at their pop-up donation event every second Saturday of each month at First National Bank in Sparta. The Habitat team will be there ready to go to receive your donations. So don't miss an opportunity to declutter and make a difference at First National Bank in Sparta with the Habitat Restore pop-up donation event every second Saturday of the month.
And now, back to Insurance Matchmaking with Matt Libby Insurance.
All right, and we are back on Insurance Matchmaking. I was talking before the break about a couple of weird instances we've had with people losing coverage or losing their subsidy and being able to go in and amend their marketplace application and get them a special enrollment. So there's two cases I said was a special. Well, all three were special enrollment. One was because it was a life event losing coverage. Run into a lot of people that when they lost the tax credits they were receiving, or the enhanced tax credits, and so now they couldn't afford a silver plan or they couldn't afford the silver plan that they had, most of those went and decided, oh, look at all these Blue Cross e-network plans. They're less than the plan that I had. I'll go with this one. And they don't know that networks change. So I'm putting this out because if you know someone that's complained about, oh, I signed up for this Blue Cross plan and nobody takes it, have them give us a call, because we may be able to go in and amend their application and get them a special enrollment. We may not, but it's worth I always say, it's kind of like kids when they go, Dad, can I? They can't say no if you don't ask. So it doesn't take that long for us just to go ahead and do a quick update on the income and see if maybe we can get that special enrollment and then recommend the right plan for you. The other thing was a lot of people stayed with their silver plan. We had a lot of people. I put a lot of people on a gold plan a couple of years ago because it was the cost sharing reduction wasn't worth it for them to take the silver, and it was $1.50 more a month to have the gold. So you had a lower deductible, lower copays and stuff. That made sense. When they took out those enhanced tax credits, those gold plans really didn't make sense for a lot of people now. So most people were going for the silver or bronze, and that was one of the things that we did this year. Is we had a lot of people that to keep that cost down went with the bronze. The bronze plan, you have the enhanced bronze, you have a copay to go to the doctor, you have copays for your prescriptions, and you just have a higher deductible and a higher max out of pocket. And that's where we've added that trio med, because we've been able to take someone, say maybe they would have been paying $150 for their silver plan that they had, and they didn't want to pay that. We could get them a bronze plan for $0 and add that trio med, and now you got coverage to cover you against that $0 out of pocket. The other case on that also is, again, you can move to that bronze plan and you have a $0 monthly premium, but you have the high deductible. You got a couple doctor copays, which is great. But if you have to have an MRI, you have to have a surgery, and I'm sorry, that trio med's not going to help you just because the doctor says, oh, you need to have gallbladder surgery. You're going to pay 100% for that. So that's what I'm saying. There are other options. One of the ones that we've been doing a lot is the plan called Affordable Choice. And it's a great plan, especially, or if you're one of those that you no longer qualify for the tax credit based on your income. The Affordable Choice Plan is what we call a fixed benefit plan or fixed indemnity, just depending which term you want to use for it. But it pays so much for a doctor visit. It pays so much for a surgery. It pays so much per day for hospitalization. It'll help reimburse for prescriptions. So there's a lot of things built in there that will pay for the things that are going towards that deductible on the other plan. And the point that I wanted to bring up on it, there's 4 levels to that plan. And you have the Elite and the Classic, and then a Plus level of each one of those. And the Elite Plus is the most expensive. It's the richest benefits. It's like $6,000 per day for when you're in the hospital. And if you keep that plan for several years, it goes up each year to the 4th or 5th year. I don't have the chart in front of me right now, but it goes up like $500 or $1,500 per day till it caps out at, that's why I say I want to think it's $500, because I think it caps out at $7,500. But it's an increase, per day because you've kept the policy and you haven't used it, so they're okay with increasing your benefit. Works great with a bronze plan that has that high deductible, or it also works great as a marketplace alternative. I look at it this way. If you qualify for the 0 premium plan on the marketplace, by all means get it. It covers your preventive visits, and you've got that maximum cap, and you're not paying anything out of pocket for it. But if you want something to pay for your day-to-day health care costs, the Affordable Choice is very handy there. And the reason and it is affordable. The most expensive, I mentioned the Elite Plus, and it is based on your age band. So like if you're a family or a couple, it's going to be based on the older spouse. So if the older spouse has moved into that next age bracket, then you're going to, that's the rate for your family. It's based on whoever's the oldest. But for a single person, and it's not based on male or female, it's just based on age of the person, whether you're, so they're the same. But if you're over, I think it's 50 to 64, it's $369. If you've I got people paying more than that on the marketplace with a subsidy. So it is affordable. Now, I always caution people is, yes, it covers a lot. It'll cover like up to $5 million of expenses, but it's not unlimited. So that's why I strongly encourage somebody, if they're going to get, or they go with a short-term plan. I have one provider has a $25,000 deductible plan. And again, you're getting that just so you have that cap, is take that lowest, get the lowest cost short-term plan that will cover just in case, and then get the affordable choice to cover everything, up to that point. Because you're still going to be able to count whatever you're spending on that towards your deductible, and then you're good. The other thing with the affordable choice, you're not worrying about a network. There is a network, so you will get better rates, and it uses what the Health First network, which is actually Aetna owns it, and it's what they call a rented network. So a lot of different carriers, smaller carriers will use that network to be, so doctors are negotiated into that network at that whatever the rate is at their reimbursement. They, you come to their office, they're going to get paid a certain amount by the insurance company. That's why, and your copay just goes towards that. The same thing with the affordable choice is that affordable choice is not a copay. It pays a certain amount towards a doctor visit. So depending on your plan, it could be $75, could be $100, could be $200. They're going to pay that amount for that doctor visit. If the doctor charges $100 and your amount for a doctor visit is $200, even if you're able to assign the benefits to the doctor with a card from that plan. When they settle it, they're going to send $100 to the doctor, and they're going to send $100 to you, because it was that event triggers that benefit, and that benefit is $200. So if the doctor bill is $250, they're going to send the $200 to the doctor, and the doctor's going to send you a bill for $50. But a bill for $50 is a lot better than a bill for $250. So it comes in really handy. The neat thing again on this plan, it is not enrollment period. There's no enrollment period. You can enroll in it today and have it go in effect tomorrow. So that's the beauty of that plan. You don't have to wait for open enrollment to get some coverage. Now, it is underwritten. So I have had one person decline that I applied for, and I think he could have maybe got it approved on appeal and didn't do the appeal. But it will take diabetics. Now I have to qualify that. If you are an insulin dependent diabetic, it won't approve you. But you can be diabetic and have it controlled, and it does have a height and weight chart, and in the weight, the maximum weight is less for someone who is diabetic. They also will look at like some of your other prescriptions. So if you're taking 3 different blood pressure medicines and diabetes medicines, or a couple of different diabetes, you might not be approved for it. So they're not going to approve everybody that has type 2 diabetes, but you can be approved. And the reason I bring that up is you've probably heard me talk about the short-term plans. They are also underwritten, and I mentioned it, that one with the $25,000 deductible. Some of those will have copays for doctor visits, or the higher the deductible, the less the monthly cost, but it's just catastrophic insurance. So I like to couple that with like the affordable choice, but not by itself. You can get it by itself. We have a lot of people take that option too. They don't take diabetes at all. So any form of diabetes, you're not going to qualify for one of the short-term plans. They're great plans, but they're not great for people who have diabetes or other health conditions. So there is a underwriting process, and it's basically, yes, and the application's a little longer, but you have to put in who your doctor is. You have to answer the health questions. You have to say when was the last time you went to the doctor. You have to fill out, list all your prescriptions and what they're, how. At least this one is. I know one. How long have you been taking it? It's like, I don't know, 15, 17 years. I don't remember when it was prescribed. I don't remember when I started taking metformin. I don't remember what day that was. I don't remember when I started taking blood pressure medicine. It's been probably 15 years or more. So I don't remember those dates. I just know I take it every month. I've got a doctor's appointment next week that I'll have to get my refills. So, but you do have to, list what you're taking it for. And I don't know why most of the time you shouldn't have to list what you're taking for, other than sometimes there are drugs that are for a couple different things, and one of those conditions could be a knockout. But I'm sorry, if you're taking a torvastatin, it's for cholesterol. You shouldn't have to list it's for cholesterol. If you're taking lisinopril, you're taking it for blood pressure. There's nothing else you take those prescriptions for. So I don't know why you have to say why those are for. I probably could leave it blank on the application and be fine, but it's like, really. But it's pretty easy underwriting, and usually within a couple days, if it's approved, it can you find out right away. If they have to do a little studying on the underwriting, sometimes they will make a phone call and interview the person. I just did a life insurance plan for someone recently, and it asked questions about gallbladder. Well, it was 12 years ago. The gallbladder was removed, and there was no cancer. So I don't, but there was something in the medical information board that was notes that they, and I think it's just a matter of when you have a surgery like that, there's going to be a biopsy on it. And what it was, I think it just didn't get updated that it was negative. Those things happen, but it didn't stop us from getting the policy, and the person actually got approved for higher than what we applied for. Generally, when I do a healthcare application, I like to apply for standard. Sometimes they have what's called standard plus. It depends on the carrier. I don't like to request the highest preferred underwriting status, because when it doesn't get approved at that level, then you have to go back to the client and say, "Oh, I got you approved, but it's going to be this much per month." It's much easier to say, "Hey, I got you approved. Oh, and by the way, the rate went down." So that's a lot easier to sell than, "Oh, I got you approved, but now it's going to be $50 more a month." Well, what if I take a lower amount of insurance? So I want you to be able to get the most insurance that you can qualify for. Of course, actually, if you're willing to take the higher amount, I get paid. Life insurance is one of those. The premium really matters, because we're paid a percentage on the rate of the premium. Some plans, like the Marketplace, I'm not paid by how much you pay. And again, why would I want you to spend $500 more a month on a gold plan than a bronze plan that maybe I can get you for zero or for a much lower amount, and then supplement that with other coverage that will fill those gaps, and you're only paying $150 more a month? I'm going to make more money because I'm getting paid on both policies. Full disclosure, I do have to earn a living, and I am going to suggest these plans, not just because I want to make more money, but also because I want to make sure you're well covered, because it's really frustrating when I get a phone call. Somebody goes, "Hey, did my coverage cover this?" "Oh, no, we went this and this because you didn't want to go with that." "Oh, yeah, you're right." So that comes up. People get their coverage and then they're upset. So looks like I'm out of time here. And until next week, stay tuned to Grace 107.7 and listen to Insurance Matchmaking. And remember, we don't sell you policies. We match you with the right policy for you. And we'll talk next week.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.